so much you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Welcome to Is It Bad for the Economy, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. My name is Kobi. I'm a Democratic media consultant trying to figure out how the Democrats can finally get the credit they deserve for cleaning up the Republicans' recession messes for almost my entire lifetime. And I'm joined by the anonymous financial practitioner, Banker Bill, who's doing great work at a bank you've definitely heard of. Thank you so much for listening. Please, if you can, share this podcast with your friends and family. Leave us a 5-star review. We're so happy with this big jolt of momentum that we're getting in as we close out the year. But Banker Bill, this entire year, you've made it crystal clear that there's no point in negotiating a better trade deal with China because they're just going to cheat anyway. Trump just met with China President Xi Jinping. Do you feel like the headlines coming out of that meeting are hot air?
The headlines, not necessarily. I think the actual substance, yes, hot air. So the U.S. gets a promise China will do something on fentanyl. China's been promising that since 2017. They've made a commitment to the U.S. to buy soybeans again. They were buying soybeans until April of this year. And they've promised to delay export restrictions on rare earths, which, as far as I can tell, were mostly already been delayed. But there was some saber rattling that U.S. companies were really raising some red flags saying, hey, we're actually submitting orders and they're backlogging us, they're sandbagging us, we're not getting what we want. So there was some substance to that one. China gets in this an immediate 10% reduction on tariffs down to 47%. But now I'm reading as of November 2nd that maybe the tariffs are actually going all the way down to 10%. If that was the case, which I don't think it is, at least I hope not. If China was the bad actor, the worst actor in all of this from the start, and they should be paying the highest rate, it doesn't really make a whole lot of sense to me that we would cut back all the way down to 10%, which seems to be the best you can negotiate as another country with the U.S. today. But leaving that to the side, the U.S. is also promising to delay export restrictions to some Chinese firms for up to a year. So, from my perspective, the agreements are marginal. Maybe you could say Xi Jinping came out with a stronger hand, particularly on the rare earth standpoint. But we're basically back to where the U.S. and China were on trade policy in March or April of this year.
So even if China does everything that was agreed to in this initial deal, we're not really much better off.
No, and two of these three things, China is going to do something on fentanyl and China commitment to buying soybeans. Again, China's been committing to do something on fentanyl since at least 2017. There's really no evidence of that. Two, the commitment to buy soybeans. They had been buying soybeans from the U.S. until April. The U.S. soybeans are of a better, higher quality, which we covered in our soybean episode, so they'd much rather have them as is. And then, to boot, we don't know what's going to go on necessarily with the reduction in tariffs.
Well, it's great that some soybeans are finally being sold. We hope that's a help to some farmers out in the Midwest who've been struggling because of these deals. But it doesn't look like it's a very good deal. Not that many soybeans have been sold, right? The Onion was joking it's around 11.
Yeah, I don't know how many it is. It's supposed to be like 12 million metric tons this year and then 25 million over each of the next 3 years. Again, the Chinese making commitments to buy X number of things or that, and they haven't lived up to it. That's been my problem all along.
Well, I just think it's crazy that we've gone from the deal sounds great and then in practice it's terrible because China just breaks it to now the deals sound middling and we think that China's going to break them even more. I mean, 12 million metric tons of soybeans, that's less than half of what we sold last year. 25 million spread over 3 years would be, so we're basically going down.
Between a third and a half, yeah, sure.
So the headlines aren't even worth getting excited about anymore.
No, I don't even think this is a deal. I don't think this is a deal. It's a retrenchment back to the lines from March and April. It's not a deal. They're both sides seem to be trying to take the pot off the boil.
Well, this is starting to get even more embarrassing than it already has. But Bessent laid out a 3-3-3 plan for Trump. You've been kind of tracking that plan as a benchmark. Can you remind us what that is and how's it going?
Bessent was touting this 3-3-3 plan, but there were three tenets of this, and I want to go through them each with you. 3% real GDP growth. The second is 3% U.S. budget deficit to GDP. And then the third was increasing U.S. energy production to the equivalent of an additional 3 million barrels of oil per day. So for this year, for 2025, we're looking at about 2.4% based on my estimates. And how I'm getting there is real GDP for the first half of the year was running 1.6 to 1.8%. We use the Atlanta Fed GDP Now tracker for Q3. If you assume with me that Q4 is going to basically be an average, let's say, of 23 and 24, that gets me to my 2.4%. Which I think is excellent. The IMF is estimating 2%. The Conference Board is estimating 1.8%. And the Philly Federal Reserve survey of economists is 1.7%. So we may see some slippage from here versus my estimate, but it's looking like, at least from my perspective, this is a good year on real GDP. A 2% figure, real GDP number, would mean that the United States grew by the entire GDP of countries like the UAE, Singapore, Israel, Sweden, and that's real GDP accounting after inflation. But that's still below Besant's 3% target. From my perspective, 3% real GDP is at best the aspirational case.
What was it? What was in 2024 under Biden?
Biden last year, 2024, was 2.8. 2023, I think, was 2.9, and 2022, coming out of the pandemic, was 2.5.
So is that 0.4, 0.5 between Biden and Trump meaningful, or is the message here just fundamentally the economy is still strong, despite all the chaos that's going on?
The economy is still strong. And when we were coming into the election last year, recall that we were all saying that the economy is slowing. And so that's come through.
So on the first three, we're not doing great, but we're doing okay.
We're exceeding my expectation, but we're not meeting his target.
Well, we're worse off than last year, and
Yes.
we're worse off than their target. But if you're saying, hey, this is still pretty good, then the point's well taken. How are we doing on the deficit to GDP? That can't be looking good.
Sure. So the second three is a 3% U.S. budget deficit to GDP. I firmly believe that the United States can run a deficit in perpetuity at 3%. The current deficit is 6%. It looks like the budget deficit nominally year over year, it did improve by $40-odd billion. But it seems that the main driver of that is brought in by tariffs. Year to date, tariff revenue is 220 or so billion. They still have another $900 billion to go in order to achieve that 3% to GDP number. So they'd have to get from 6 to 3 you'd have to find another $900 billion somewhere. Bringing the US budget deficit down to 3% means GDP probably also takes a hit. Think of your simple Econ 101 GDP equation, which is GDP is consumption plus investment plus government spending plus your net exports. If you are going to bring down government spending, bring that down another $900 billion in here, in terms of deficit, you need to offset that somewhere else. So far, this administration has shown you it's focused on top line growth, not necessarily the budget deficit, and not inflation. So I think they're going to continue to run things hot. And this second 3% budget deficit to GDP seems like a pipe dream.
After the big, beautiful bill, can we even say that they've just abandoned this target outright?
I think so, yes. And that was the narrative on why interest rates would go higher. And yet over the last year, we've seen the 10-year yield turn down. That's interesting.
I can't lie to you. I don't really care about this last three.
Oh, but you should. I think it's the most important one.
But oil prices are so low. Who cares about increasing our production?
Well, it's not. This isn't necessarily about oil. We want to increase U.S. energy production. And I won't bore you with the math, but their goal, he's saying, if it's 3 million barrels a day, that means increasing U.S. total energy production, oil, gas, nuclear, wind, solar, wherever you're getting it from, by 6 to 7%. Okay. 2023 versus 2022, we increased production by 4%. So I think that goal is achievable, but not if they're going to play their version of woke culture politics by canceling energy projects. They want a permanent halt on offshore wind in New Jersey. The coastline of New Jersey is top 5 of all coastal areas in the United States for wind. Second, they are gumming up the largest solar product in Nevada, which is the best state in the nation for solar. That leaves us with oil, natural gas, and coal. And if that's all we've got to work with, I don't think that 3 million barrel equivalent energy production increases is achievable. Consider that oil production was much higher under Biden by almost 1.4 million barrels per day than it was under Trump.
When oil prices are this low, it's just hard for me to believe that increasing oil production by that much is on the same tier of priority as getting the deficit down and getting GDP growth up. And I almost feel like they left off inflation because 332 just didn't have the same ring to it.
That's funny. I didn't think about that. But what I'm telling you, if all they are going to focus on is oil, natural gas, and coal, it's going to be very difficult to impossible to get there. that 3 million barrel equivalent, right? We were told that this was an all of the above administration on energy policy. And if you're telling me that we're going to gum up projects in Nevada and you're going to put up a moratorium on wind projects in areas where wind is good, then are you really serious about, trying to get that 3 million barrel per day equivalent?
Well, once again, it doesn't sound like capitalist intentions are driving the bus.
Yes, fine.
You and I have both been really, really frustrated by this recent narrative that the Trump administration has proven that the economy has much more of a tolerance for tariffs than we initially believed. There was so much doomsaying, especially by the more serious economists and economic writers around Liberation Day. But I was just running the math myself trying to figure this out. And I just looked back at August. We brought in $30 billion in trade revenue. We brought in $260 billion of total goods. 30 is about 11% of 260. Isn't that just an 11% effective tariff rate? And wasn't that exactly what you said it was going to be before Liberation Day?
Yes, I think you have it right. Markets or companies had been preparing for something like a 10% effective tariff rate, but that's what we could be looking at. And to date, it seems like that's exactly what we have. And it's basically an 11% national sales tax with implicit congressional support. That's it. Yeah, I think you have it exactly right. You said it was what, 30 billion in tariff revenue in August?
I think this is the ultimate Trump chickening out statistic, and I'm just mad that even the Wall Street Journal didn't seem to quite figure it out.
It's an interesting case. I mean, 11%, 10% or so is what I think most companies, large companies who can muster this, had been anticipating. And that's kind of where we've settled. You're right.
Yeah, I just think we need to prepare the narrative now that the tariffs are a smokescreen. He's been lying about how high they are the entire time. And the lesson here isn't that tariffs work, it's that Trump has been chickening out since day one.
Well, I think that's part of what people like about him, right? Is that he goes to these maximalist positions out of the jump or from the start and then walks them back. And this is no different.
Yeah, I think that's true. But at the same time, the other trick he's been playing with the tariffs is claiming that they're, on the one hand, trade leverage, and on the other hand, they are a way of reducing the deficit. And I think we just went through a really great overview about how none of those things are true. And
I agree. I think he's fooled a lot of people into believing both of those, yes. That both of those can happen simultaneously.
Well, not just that both of those can happen simultaneously. I think we all know that's not true, even if it's possible to get a quick populist bump out of it. I'm more frustrated by the fact that when he says the tariffs are working, we say, well, they're not reducing the deficit that much. And he says, yeah, but we're getting great trade deals. And then when we say, oh, well, the trade deals aren't that good, and he's saying, well, we reduced the deficit, and you just end up in this circle. And I think we need to go back to Taco.
Yeah, I suppose it's a good example of, everyone assuming it was going to be all-time bad, and it turned out to just be not good. I'm shocked to hear you say Trump chickening out is an 11% national sales tax on imported goods. That's chickening out. I guess it is for him versus Liberation Day tariffs, yes. But then I think the positive spin for him would be he'd tell you, he was never going to go with those numbers.
Right, which is even more so why why is the Economist saying, do tariffs work? We made it this far without mentioning unemployment. Amazon had a big layoff that a lot of folks were freaking out about. Is the AI crash coming? Is the big unemployment crash coming? Or is this just a one-off?
I would not take these headliney numbers of job reports from S&P 500's firms necessarily as the benchmark for the labor market. Why? Because S&P 500 companies employ around 20 million people in the United States. Sure, it's a lot of people, but the labor force is 170 million people. A much bigger driver of the underlying impacts of the economy are what smaller employers are doing. Forget companies with 1 million employees. I'm talking about companies with fewer than 30 employees. Much more emblematic of what's going on in the economy. We also, in 2022, had these same headlines with tech layoffs and people getting laid off. And we thought they were going to flow through to large increases in the unemployment rate. Never did. Those people got severance. They were laid off for some amount of time. Maybe they collected unemployment and they got jobs somewhere. Now, sure, unemployment has ticked up a little bit, but it hasn't spiked.
Well, I think the question is there a big AI cliff coming, or is it going to be the type of thing where the largest corporations slowly figure out in waves how it's going to allow them to optimize? They have some targeted layoffs here and there, and the smaller firms may not have an opportunity to onboard that kind of technology for, another decade or so. And so this is not going to be a big cliff. This is going to be a small trickle.
Yeah, I think that's a fair point. You may have, as you said, AI firms implementing AI into their business with either closed loop models or open-ended models. and they may be letting go of some decent talent. And I would hope that talent resurfaces at a smaller business that may not be able to afford it, or it doesn't make sense because they don't have the number of people, they don't have the revenue to make an enterprise AI solution worthwhile.
Last time we were talking about the AI bubble, and one thing that you really pushed back on was this narrative that AI is the only thing that's going right in the country, even if the general vibe has soured once again. Do you want to walk us through quickly the numbers that should make us feel good about the strength of the economy right now?
Yes. So first is, let's talk about the stock market. Look at the Vanguard Total Stock Market Index. So this is Vanguard's ETF that tracks the entire market, not just the S&P 500. That's up 19% year over year. If you look at an equal weight ETF, so we take all of the mid cap and larger companies, so mid-sized companies that are public and larger, we put the same amount of money into all of them and see how they do. Over the last year, that's up 8%. So sure, the largest companies in the US have, jumped to the forefront and continue to exceed expectations, like Nvidia or Microsoft, Alphabet, et cetera. Most of the stock market, most of the equity market, including small companies, are doing well. Interest rates on the 10-year government note have fallen from 4.57% to under 4%. The 30-year mortgage rate has fallen from 6.91% to about 6.2%. Inflation still too high. Unemployment grinding higher. And while it's rising gradually. So you have this mixed bag, but nonetheless a resilient bag of indicators, of profits, of people that are, losing jobs, but plenty of people also finding jobs, and you're paying for it, meagerly more by 3% inflation.
Okay, companies are doing great, people are doing worse. Why should the average voter, why should the average news consumer feel good about the fact that the stock market number goes up whenever they turn on the news, when they feel like they're paying higher prices, they feel like their job is less secure, and they see, some of the more negative numbers about car loan delinquencies and Halloween candy prices and all those flurries of negative numbers that we keep being bombarded with, but also are a reflection of the economic realities that we're living in every day.
Yeah, I think this is the narrative of the K-shaped economy, where you draw a line on the left side, which is the vertical line for the K, and then you have a line going up and a line going down. And the line going up is the experience of the equity markets, stock market, and then the line going down seems to be the economy we're all actually living in. Let's say, why should people care about stocks and that the fact that they're going up? Well, 60% odd of Americans own stocks. It's the 401ks, the pension plans that are all seeing these increases, right? Albeit with higher inflation. Hey, it's not great that inflation of the mixed basket of goods is 3%. Inflation in some other areas, like we've covered on food, is up maybe 10 or 15%, depending on what you eat. But at the same time, you're looking at your 401k, you're looking at your stock market account, you're looking at your retirement plan, and that's up maybe 20% year over year. So it continues to be a story of the top 20% extending further higher, and the bottom, let's say 80%, especially the bottom 20%, maybe not trending water, but actually having a relatively worse standard of living.
Why should this make me feel better as opposed to making a Wall Street trader feel worse?
Oh, that's a very challenging question. I think the extent that you've taken a measured approach at investing, or a measured approach at climbing the corporate ladder, or doing whatever you do, if you're a tradesperson, whatever, as long as you've stayed employed, you are probably doing better off than you were last year and the year before and the year before. If you are one of these people who unfortunately lost their job and haven't been able to get back on the wagon, you're doing much worse off maybe year over year, because inflation is hurting you that much more. I think what's different now versus maybe the last decade is the middle 60, the people that aren't in the bottom 20 but aren't in the top 20. And for them, on paper, they have seen their wealth increase dramatically, especially when looking at their house. But that equity that they have in their house, with interest rates higher, and because they do need some place to live, is not easily tapped. Meanwhile, all of their costs have gone up significantly if you consider just operating their house. I'm talking about the utilities, the cost of maintenance on the house, property taxes. All of those things have gone up significantly. And I think that what's different here is the top 20% often have a smaller proportion of their wealth tied to their house. That's because they have other business interests. They have much larger stock portfolios, et cetera. That equity that they have often can be tapped readily, or at least more readily than your house can, which allows them to take advantage of these opportunities that we're seeing in the equity markets today. It seems like the top 20% are accelerating, whereas the next 60% are kind of meandering higher, or maybe just doing a little bit better, but they don't really feel it because they can't access any of that.
Are those that are doing well pulling us all up more than those who are doing really poorly at the bottom are pulling us all down?
Oh, that's a good question too. Look, I don't know. I don't know that this is a situation right now of a rising tide lifting all boats. I can't say that. I can tell you a data point I find interesting. The top 20% of all households right now are driving 50% of all U.S. consumer spending. I would expect the 20% to have an outsized effect. Would I expect it to be more than 2x? No.
When we talk about what's going right in the economy, it seems to be corporate activity. When we talk about things that are going wrong in the economy, inflation, unemployment, those are the things where we put a little bit more of the responsibility on the federal government. Is it fair to say that basically companies are doing really well and Trump's holding the government side of things down a little bit? And I don't just mean with the tariffs, right? Because we just talked about, right? Like, how could I make the argument that Trump's holding everybody down if it's only a 10% tariff, which we all had priced in from the very beginning? But it just the chaos, the changing his mind every 3 seconds, the fact that everybody's waiting for something to just be normal for 3 months, isn't that stability exactly the thing that we're missing in order to get inflation down, to get unemployment down, and to make sure that that incredible corporate activity at the top of the ladder even has a chance of making it towards the bottom?
I think that's a reasonable position to have. At the very least, that could be the narrative, but I think it's hard to say because there's so many new impacts over the last 10, 11 months that we're digesting. There's the extension of the big, beautiful bill and the other stuff in there. There's the tariffs that we're still navigating through that you touched on. But I think, too, there's the cost of compliance and there's the opportunity cost of companies, businesses, people having to focus on something else driven by politics, driven by maybe the Trump administration, that's taking their time that they would otherwise not have to focus on. I do think there's cost to that. I do think that there's some kind of economic drag to that. Look, I can't prove it to you, right? I can't take out my pencil and piece of paper and model it out for you. But I do think that that does create some kind of headwind for the economy. The Fed's even told you, Kobe, that in the absence of tariffs, they expect that inflation would already be at or about 2%. Their actions are even saying that too. They held the interest rates high throughout much of the first half of the year, even when they were cutting into the election, because they thought and wanted to see if it was true that the tariffs would only impact the price level, as in a one-time price adjustment. That seems to be coming true. They are themselves telling us they think inflation will be lower without the tariffs, and that once the tariffs come into effect and are sitting there in steady state, that you're going to see a normalization of price increases. They are not only messaging that, but are acting on that by their recent interest rate cuts, by favoring unemployment rising, even while it appears inflation is also rising.
So the chaos is so bad that it is increasing inflation, even if it's only 10%.
Yes, 100%.
Oh,
Inflation.
Man. Big picture. If Kamala
Yes.
were president, if Trump were acting a little bit more like he did during his first term, would the economy still be a mixed bag? Or on the backs of this corporate activity, on the backs of cheap oil, this would be a big boom era?
It's an unanswerable question for me. It's possible, but there's so many things that have changed. Does, after Kamala Harris was elected, had she won, do oil prices drop? Maybe, maybe not. I don't know. The outgoing Biden administration, I don't know if Harris would have been, but the outgoing Biden administration was not nearly as favorable to crypto and artificial intelligence as the Trump administration incoming was. I think it's fair to say that wouldn't be as much of a tailwind in spending as it has shown, as it's emerged itself. I probably shouldn't include crypto in there, but I think AI.
You're giving Trump credit for AI?
No. I think that not all, but much of what's coming to fruition right now, the groundwork was probably laid for that over a year ago of what was actually happening at companies, at businesses, in startups.
Right.
I think what may have changed is the noise or the messaging on the regulatory environment. Whether that would have a suppression on valuations, maybe. On stock prices, maybe. But I don't know. It's impossible to say.
I, I mean, we're talking in hypotheticals. That part of this I respect. But if you're saying that not just you or me speculating, but the Fed is saying that inflation would be at or just above 2%, and
Yeah.
we measure the trade-offs of that with a slight reduction in AI stock market prices because there is the faintest whiff that a Democrat might actually impose an honest to goodness corporate regulation. That does not seem to me like it seems to me that no, it's hypothetical. Nobody can know for sure. But I think most of us would take 2% inflation over ChatGPT's stock price being down 2% because, Bernie Sanders might get to write one sentence of an AI bill.
I think you're on the right side of an 80-20 issue there.
It is Sunday, November 2nd. SNAP benefits appear to be frozen as of right now. Besant said earlier today that they might get the SNAP funds turned back on as early as Wednesday. In a shocking regard for the justice system, Trump is, quote, working with the courts, unquote, to unlock emergency SNAP funds that, of course, have already been allocated and that he's already been ordered to unlock by the courts. But we hope that cooperation goes really well. Folks who love investing in SNAP say that it gets a return on investment as high as 180%. Big picture, Banker Bill, where do you stand on SNAP?
Food assistance programs in the United States are emblematic of the number of people that we have in the country living in poverty. If you make more than like $21,000, depending on your state, you don't even qualify. You can't even be on the program. So, that's my immediate view on it. It's a bipartisan problem. The top 4 states that are drawing on SNAP probably won't surprise you. California, Texas, Florida, New York. California has 14% of people are on food assistance. Texas, it's 10%. Louisiana, Oklahoma, New Mexico, Oregon, Washington, D.C., over 16% of all the population in those places are recipients. And these percentages are closely tracking the number of people living in poverty in those states. I mean, we're talking poor here, Kobe. Poor. This isn't like, oh, you get one pair of shoes a year. This is like you don't even have enough money to buy shoes.
And what do you think? Is SNAP a good way of trying to alleviate that, trying to invest in those people?
I don't think it really matters what I think. Farmers seem to be very favorable to food assistance programs. The food assistance programs we have that we spend the money on, the vast majority of the food that's sourced is domestically sourced food. There's all sorts of myths in there about what you can and can't buy. You can't buy beer, wine, liquor. You can't buy cigarettes and tobacco. You can't buy anything that has marijuana in it. You can't buy supplements or vitamins. You can't buy hot foods, right? So you can't walk up to the hot bar and buy a bunch of food. That's not allowed. You can't buy pet stuff. You can't buy cleaning supplies. Is there some fraud? Sure, of course there is. It's the American way. There's always going to be fraud. How much is there? I don't know. It doesn't really matter what the estimate is. Should we be spending some money maybe on trying to get the fraud as low as we can? Sure. We're spending like $140 billion or so on SNAP, WIC, which is women, infants, and children to buy like formula, and then this thing called the Child Nutrition Program. Out of that $140 billion, 100 is in SNAP. Okay, so that's the overwhelming majority of it. On SNAP, there's 42 million people. All right, that comes out to, on average, $6.52 a day per person. That's it. And you mentioned something about you can get, for every dollar you spend, you get $1.80 in economic activity. The reason for that is because these places are so poor that putting that relatively small amount of money into that community has that multiplying impact on that community. That's how poor the places are that we're talking. If you put an extra $6 into everybody in New York City's hands, probably wouldn't make a whole bunch of a difference. But you put that in a place where 20% of people are poor, living in poverty, you could see how it has an impact.
Look, you don't have to convince me that feeding hungry people is a great investment, especially when those people are Americans. But one statistic that I saw, and I saw a couple of different sources for this, but essentially folks are estimating that Walmart gets between 20 and 25% of every SNAP dollar. So if we're asking ourselves whether SNAP is good for the economy or not, I kind of see two arguments there. either SNAP is kind of a failure because even though it does a great job of feeding people, what we're essentially doing is subsidizing Walmart's wages and creating a system in which they're incentivized to keep their workers from being full-time workers and keeping their salaries low so that they're not only getting that tax money directly from the taxpayer through the SNAP recipient, but then they're also, all their employers are SNAP recipients, and it just creates this feedback loop where they're essentially making money by creating poverty? Or is it that, look, the federal government is never going to get goods around this country as quickly and as cheaply as Walmart is? This is one of the greatest logistics operations in the entire world. It would be much better to give taxpayer money to poor people to go spend in the market, because one of the things that the market is really good at is getting supermarket prices down. So would you say this is a good way of doing it? Or are there economists who are like hoping that somebody gives them an opportunity to completely rewrite SNAP top to bottom?
Interesting. First thing, you said Walmart gets between 20 and 25% of every SNAP dollar. That's totally believable. Walmart is the largest grocer in the United States. They've got like 5,000 stores.
Right.
So that doesn't surprise me one bit. The second thing you said is Walmart not paying livable wages or paying poverty wages. Well, from what I can see, Walmart's paying a cashier something like $12 an hour. Average hourly pay for a front of the store associate is $18 an hour, thereabouts. So $18 an hour would come out to, I don't know, what is that, 30 grand a year or so?
Good luck getting the hours you'd need to get up that high.
Right. So that, I mean, that's really the problem, right? Is that the amount of money they're paying per hour is maybe of a livable standard for that zip code. They can't get the hours they want. And so exactly what I'm saying to you, Kobe, what I refer to as the U6, those people that you're describing would be in the U6 that aren't getting the hours they want, that would otherwise be willing to work, and are falling off the wagon of living standard and are maybe ultimately having to, apply for some kind of food assistance program. And maybe they're making, as a single person, 17 grand a year for Walmart, and they're just under that threshold, and they're getting a food assistance EBT card to buy food. That's then spent at Walmart. Sure. But remember, look, I'm not going to go to bat for Walmart here, believe me. But the grocery store profit margins are like mid-single digits. We're talking like 4 to 7%.
Yeah.
So Walmart's not like getting rich per se on this. Do they have a lot of scale? Absolutely. But a lot of that scale also flows down to the end consumer by way of lower price. We need to somehow find ways to drive economic activity in these areas and bring people out of poverty. Once they're not poor, they won't need a food assistance program. The current administration, with the changes in the BBB, you're probably going to see the number of people on a food assistance program fall because of the changes to the bill. That doesn't mean that there's any less people in the United States living in poverty. It seems like that they've got two goals: get the number of people on benefits down by any means necessary, and force states to individually bear more of the cost of food assistance. Taking measures to reduce the poverty rate doesn't seem to be a priority for them. That's all I can tell you.
Well, the biggest, most dramatic change that the Big Beautiful Bill made to SNAP was in how it's funded. Currently, every single dollar that goes into SNAP is from the federal government. But SNAP is introducing this new mechanism where the states will have to kick in a percentage of the budget if their SNAP program doesn't get their, quote, payment error rate, unquote, below a certain benchmark. Classic example of the means testing gambit. We have to ask ourselves now as complete laymen who don't know the context, don't know what it's like to go to work and deal with this stuff every single day. Is this a good faith accountability measure that's going to kick people in the butt and get them to clean this stuff up? Or is it just onerous to the point of sabotage? Planet Money did an awesome interview with this guy named Nate, who's in charge of getting the payment error rate down as low as possible in Oregon. It was one of the worst states. They're quickly becoming one of the best ones. He's awesome. These people are trying so hard. He's bringing technology into it. He's even built a little AI system for his employees to keep up with all the changes that are happening to SNAP because of Trump, because of all the chaos. But at the end of the piece, they basically get down to, are you going to be able to get the payment error rate down low enough without ultimately just using these requirements, these screenings, these record checks as a way of keeping people out of the program in the first place?
Let's define the error rate. The error rate is saying, did you pay the right person, and did you pay that person who was eligible for that benefit the right amount? The national error rate is about 11%. Most of that is people being overpaid. Fine. How much are they overpaid? I don't know. But I told you that, typical recipient's getting like $6.50 a day. How high could the overpayment rate be? I think this would have been a great initiative for that whole Doge campaign. Instead, that turned out, as we know now, to be bullshit. And to the extent there is fraud estimated at $10 to $20 billion in the SNAP program, it seems to me that you could have had a technology-driven initiative to spend $1 billion or $2 billion to get that 10 to 20 down to 5 or 10. That's not what we got. Instead, they are continuing to narrow and narrow eligibility criteria, which ultimately, as I've already referenced, is not going to reduce the number of people in poverty, which is the actual goal, or would be my stated goal, to treat the underlying cause of the problem. All they're doing is seeking to tie you to a KPI that if you fail, they will use as an excuse to reduce funding further.
Accountability is a good thing, but bullshit KPIs is complete bullshit. And in this case, I think we can say pretty definitively that it's a bullshit KPI because the funding for the administrators who are actually supposed to make the system more efficient are supposed to do the work of double checking, of auditing to make sure fraud is as little as possible. Their funding got cut in half by the BBB. So there you go.
Oh, they cut, you buried that. You never said that. So the very people that are supposed to be making sure to try to reduce this error rate or reduce fraud, they cut the budget for that.
Yes.
Jesus. I want them to be successful in some of this stuff, like the stated aims, and it's just they don't even do the stuff that would get you there.
Well, like we started off this episode, the fact that, they're not even hitting their own metrics at this point is just...
like the 333. Yeah.
It's so pathetic.
It's disappointing, man. It really is. At least in the state of Pennsylvania, in any given month, half the people that are receiving a food assistance benefit are working. And more often than not, the people are in these, what you'd expect, I guess, these low wage, super high turnover job where they're working 4 to maybe 8 weeks at a clip, and then they're unemployed for a couple months, and then they find work again, and it's just an ongoing cycle.
In terms of helping those people, in terms of getting the poverty rate down, do we need to get them to do more, or do we need to get the top 20% to spend more of their money and to spend more of their money in ways that's going to get to that bottom 20%?
I think it's the latter. How do you get money? All this money, this wealth that's being made from Boston down to Miami. Take your pick a city, from Charleston to Savannah to Richmond, all the way down the East Coast, or along the West Coast, San Francisco, Seattle, LA. How do you get that into Appalachia? How do you get that into rural Kentucky? How do we get that in the Northwest Louisiana? How do we get that into pretty much the entire state of Oklahoma, where poverty rates are in excess of 15%? That's remarkable. You're telling me 15 out of 100 people are living in absolute poverty, are making less than 20 grand in a year? Think about that. How would you even live?
I think we go back to the 333 deal, the 333 plan. Look, FDR wanted to put a chicken in every pot. I say, let's increase that energy production by putting a windmill in every lawn, a solar panel on every roof. Thank you so much for listening to this episode. We had so much fun. Thank you for sticking with us for the last episode. We hope that you were happy with 2 episodes, but we're sorry that you were 20 minutes short on Is It Bad for the Economy podcast material for a couple of days there. Thank you so much for sticking with us. Thank you so much for listening. Again, please share it with your friends and family. Please give us that 5-star review. We have some big things coming down the pipeline, and we want to make sure we're able to share them with as many people as possible. Thank you so much, and hopefully we'll see you soon.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time